And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, fellow futures traders, friends, and family. Thursday, September the 1st, Labor Day weekend this weekend. My name's John Hoagland. Thanks for trusting me with your time. We do apologize for the gremlins yesterday morning. JD was not happy about that, but hey, when it comes to technology, gremlins are always lurking around. So hopefully you enjoyed JD on the market recap yesterday, but we've got the gremlins in check this morning. We're going to have the market forecast, and as always, our focus is on accurate context, good risk management, and remaining patient. Always be thinking about what is this market attempting to do, and how good of a job is it doing getting there. This morning we had some early economic numbers. 7:30, the jobless claims numbers came out. The initial jobless claims, they were looking for 248,000, a small raise from last week, and it came out minus, well, a little lower than that, positive 232,000, so a few less initial jobless claims than they were looking for. Continuing jobless claims came out as they were expecting, but still a larger number than last week's. So productivity and cost. Productivity looks like was a little higher. Costs are a little bit lower. We're still waiting for 8:45 Central, the PMI manufacturing final, 9 o'clock, the ISM manufacturing index and consumer spending, 9:30, the nat gas numbers, and at 2:30, a Fed member Bostic speaks. Stocks are set to open lower this morning, below weekly kickoff lows on day one of September, as Fed members continue to squash any hopes of a rate cut into 2024. China has locked down 21 million people with their zero-tolerance COVID policy, so probably some demand questions coming into play, especially in crude oil and some of the commodities. Crude prices continue lower, of course, but largely kind of still in range. We're going to see that on the charts here in a few minutes. Even after yesterday's 3.3 million barrel draw on the EIA, we still have the crude oil looking to lower on, again, lower economic demand. Yield in the 10-year is approaching 52-week highs. I find that very interesting this morning. Finally, we're something in the 10-year that makes sense to me. And as always, the VIX up about 2.5% this morning at 26.55. Dollar index up near its 52-week high, 109.24. Dollar really strong. And the yield on the 10-year continues to leak higher, 3.25% this morning. As always, make sure if you like what you're hearing here, hit the lucky like button, share, comment, question, feedback, heckle, love. Tell everybody that you like it. If there's something you were missing, let me know, jhoagland@topstep.com. Subscribe to our YouTube channel. You get notifications when we do go live. Looking forward to seeing what we've got for us today in trading, not only on the market forecast, but it is Make Hoag Money Day. Thursday, Make Hoag Money Day, right after the market forecast. We'll zoom right over there. If you want to join us in the Zoom room to participate in the voting, you're going to need that link there to get in. If you just want to watch on YouTube, that's all right too. I always look forward to these sessions. All right. Good morning to everybody. Jules is the first one in the room winning the prize this morning. Scott Saw. Shaw Cunningham. Yep, no gremlins today. Theo, Patrick, Charles chilling with Dylan, getting ready for his funded account. Dan Trader, good morning. George, Rick, my brother, love you, Brody, Dario, Serenity Trader, Bill Phillips, Vince, good to see you, Rusty Golfer, Stephanie, Stephen C., Terry King, Sarah Hall, good morning, prayers and love to you as always. Chris, good morning. John Walkowiak, hey, what's up? How are you, buddy? I found a couple of pictures of you in the trading pit. I was saving them for when you popped into the forecast, but today I'm afraid we're not going to really have the time to look at it. Maybe tomorrow morning, John, we'll show a couple of pictures of you in the S&P pit. It's always kind of cool to see yourself back in the day. Jerry is awake. It's good to see you, and I hope I'm awake too, of course. Unicus, the quote for the day: make every effort to trade your edge. Then learn to trade it effortlessly. Very good quote for us, Unicus, and thank you very much for continuing to post those. We really enjoy them. I know I do. Joe, good morning. Dan Trader, Grim Reaper, good morning. Snowflake, Skynet was messing with people. Good morning. Yes, Skynet, right? Glitter Sandwich. Yeah, Rob T, Dead Letter Opener. Vlad, good morning. Haggle Matters, good morning. Teza, good morning. It's a new name I haven't seen. Welcome to the Market Forecast. Grim Reaper Trader made 82K last month in the NAS 100. Hogue, thank you. 82,000. Wow, that's great, Grim Reaper. That is quite the month. I haven't seen a month like that in quite a long time. Anissa, Dimitar, Steven, Trading Research, The Rooster, Khalid, Jay, John Wolkowiak. Good. It's good to see you, John. Yeah. Well, I think we all had a lot more hair back then, John. Maybe if we get, maybe have a couple minutes at the end of the forecast today, I can dig those up for us. Good morning, Dark Kevin. All right. We got Make Hogue Money. We're going to try and be finished with the forecast here at about 8:15, so we're going to jump into the charts right now. I had a day off yesterday. I wasn't involved, didn't participate yesterday. Today feels like a synthetic Monday to me, so I'm questioning my clarity here. So I'm just going to see what we see here and take a look, see what the open interest did. We've got some markets really close to some important inflection levels, according to where I look. Those weekly kickoff levels, really providing some texture and some context for these markets. Let's go ahead and jump in and take a look. We're going to start as usual with the daily in the S&Ps. So volume and open interest suggest a healthy downside auction. Well, obviously, we've been kind of one-time framing lower since this day here. Weekly kickoff was supportive for the last couple of sessions. Now we're going to get the chance to look at it from the other direction. Weekly kickoff low, 39.54 even. Yesterday's session low, 39.53 even. 4 ticks from weekly kickoff low. We've got a target for this head and shoulders breakout to the downside right around 3,900. Yet another big fat round number. Big fat round numbers. We had a big fat round number earlier in the week at 4,000. We've left that behind. Now we're looking at 3,900. One thing that has pointed out that I'm really kind of noticing and focusing on was this was the Tuesday when we really started to see open interest come into the market on the upside. We've come all the way back to that level. This was kind of a paradigm shift in the marketplace, and it provided some pretty good upside opportunity. We are now back to that level. Are we going to find some more longer time frame buyers protecting this area is really the only reason that I'm kind of focusing on the fact that we're back in the range from this day. There's enough space to take this market considerably lower and still be in that range. Just that was the day that really just kind of stuck out to me that, hey, there's something new coming into this market. If they're going to protect, we're going to need to know about it. So keep your eyes peeled for longer time frame participation if we continue to move lower. Take a look at the 30-minute chart here. So where are we here? We are So the market opened last night at 5 o'clock here. We're here. Are we holding overnight inventory to the short side? If we are, it looks like it's already been kind of reconciled and we're back into this overnight range. This is going to be annoying to me this morning in Make Hogue Money. I don't really, I know that we're out of balance from yesterday, but all this rangy type activity from the overnight might get a little bit sticky. I think there's a naked point of control that we're going to probably check in regular trading hours right here. Did we have a late spike? A small late spike? It looks like it on the profile. I'm not really going to call it a late spike. Just a gap rules. Just a gap move. Overnight inventory short, but probably reconciled. Gap rules. Weekly kickoff and play. My dream level for an opportunity for us today is to come back to this weekly kickoff low. To see if we can get an opportunity. It traded, tried to trade to it 2 days ago, traded to it yesterday. Now we're down below it. Sometimes what was support becomes resistance, so I'll look for an opportunity if this market attempts at all to trade to close the gap to see if I can get an opportunity up here. Take a look at the crude oil now. So crude continues to kind of get crushed. We lost 2,000 in open interest yesterday. Not necessarily meaning that there's new business coming into the downside. It's old business getting out. Last week we went low of weekly kickoff high to high of weekly kickoff high. Are we going high of weekly kickoff high to low of weekly kickoff high today? Weekly kickoff... medium time frame range bound activity here. Are we falling into some short time frame control? We very well may be. Open interest lower. Volume was pretty good yesterday. Nothing tremendous. Looking at the 30-minute chart. Opening with a gap. Just opening. Overnight inventory short. Up against some potential support areas down here. We've got a naked point of control. We got weekly kickoff low right here, which is 86.75, and we've got last week's low right here. So target rich area here. Just gonna take a quick look here to see what the opening range is. Well, we're not even open yet, so maybe we'll come back and check that opening range. We are opening out of balance, out of range from yesterday, so opening range might be something we'll be interested in. Let's take a quick look through the NASDAQ and maybe come back and see what that opening range looks like in the crude oil. So, volume and open interest healthy to the downside, adding 5,900 in open interest yesterday. Volume holding up relatively well. Remember, we're always thinking about what direction the market is attempting to go and how good of a job is it doing getting there. It appears to me that the NASDAQ is doing a better job of continuing to the downside because, just because it is. It's deeper through the weekly kickoff low here. If we get that opportunity back up towards that level, that's going to be a really good spot for me to start looking for an execution. We've got the target for our head and shoulders down here, right around 11,930. So, that's when we take from the neckline to the top of the head and measure that from the neckline lower, that's your target for the head and shoulders. So, again, take a look here at the 30. Overnight inventory short-ish, reconciled, still a gap. Gap rules apply. And again, we're out of range, out of balance. Opening range might be something interesting for us this morning. But again, just the stickiness of the overnight activity down here just seems to be a little bit annoying to me. We've got our overnight high way up here and our overnight low down here, and we're relatively centrally located. So gap rules, I think, are initially going to apply for the NASDAQ and the S&Ps. One more thing about the S&Ps, I don't think I mentioned. Yeah, this is. Oh yeah, we did. We talked about the potential target for our head and shoulders in the S&Ps as well. Let's go back to crude. We're in the opening range. This is the 1 minute chart, which I never look at. How do we get like this? Here we go. Okay, so here's our opening range. 26 ticks, not excessive. So we would be short a tick below the opening range or two below the opening range with our stop. A few ticks above the other side of the opening range. Maybe we'll go back and revisit this later on. Gold. Volume, strong yesterday. Open interest, kind of inert. Only an additional 400 contracts on a breakout below the weekly kickoff low. My focus, I think, for a termination to this current push to the downside before really getting a good reversal or pullback would be this swing low down here. From the 21st of July, that's 1696. That seems a little bit cheap, doesn't it? I was hoping we were going to get some decent moves here. Dollar's pretty strong above 109, near that 52-week high. That's just kind of crushing any longs here in our equities and even some of our currencies and Bitcoin. Here's our weekly kickoff. Remember, what was this? Tuesday. It just became magnetic to it. Yesterday we opened below it, tested back to it, and then broke. That's what I'm looking for in maybe some of our equities for the market to give us that kind of an opportunity. Overnight inventory is short. We've got a gap. We have been so far unable to close the gap, which leads me to believe that I'm going to be looking for opportunities to sell strength. We have to remember that we have overnight inventory, the weaker hands, shorter time frame traders holding shorts into this. We've got a pretty good deep dive to the downside here, but still just kind of holding here. One thing about this break in crude oil, even up past this bear flag, is relatively organized. There's no real, at least in the last few sessions, there's no gaps. We've left a couple of naked points of control, but no gaps. It seems relatively organized, this move to the downside. So we ask ourselves, what is the attempted direction? The attempted direction is lower. Is it doing a good job of it? Open interest has been overall increasing since we were back up above 1800. So overall we've been seeing open interest increasing as price pushes lower. So the market is telling us that this auction to the downside is, for the time being, still healthy, and that's going to remain until it isn't. What do you say about the euro? Range bound, short time frame control, very indecisive. The dollar again strong today, so of course we're going to see the euro taking a look to the downside. Taking a look at the 30-minute chart here. Overnight inventory to the short side, still in range. Short time frame levels are likely to be respected when you're in short time frame control. There's not the longer time frame participants Yesterday we lost 1,300 in open interest on a day that looked like short covering. Well, the short covering in short time frame takes buying power away from the market. So now we start the move to the downside. We've got our regular trading hour session / overnight session equal with yesterday's close and the day before's close and the day before's close. This doesn't look like a very strong low to me because it's been revisited so many times. And the more it gets revisited, the more shorter time frame traders are going to jump into it every time until they get to the point where they're going to break it, and it's going to continue a little bit of a move to the downside. We're holding overnight shorts. This may be a very good level for an execution to see this market come back up and take out some of these overnight shorts. But as in a longer term, it's not a very strong low. But we got to remember, we've got all this overnight inventory to the short side. Overnight inventory is short time frame. This market is in short time frame control. You do the math. The 10-year. Remember when we were coming up here, I'm like, rates are going higher. Why is this thing continuing to push to the upside? Finally, it makes sense to me, but it doesn't make it any easier to find the right opportunity and the right trade location. Well, we're getting pretty close to an important trade location in the weekly kickoff low, which is 115.30. Getting pretty close to it here, within a couple of ticks. We lost 2,700 in open interest, and we are still in rollover. So you got to remember, we lost 52,000 in open interest in the September contract and added 25,000 in the December contract. Now remember, these are estimated numbers at this point, but still the loss is in rollover. It's not in long liquidation. If there is an inventory adjustment here, it's new longs in the December contract. It's hard to believe we're talking about December contracts already. Here's the 30. Overnight inventory, where did it open? It opened here. No real overnight inventory with which to talk about. So now we're starting to see the market push down towards this important inflection level. This could be a really interesting level for us to drop in a line and see if we can catch a few fish down at this area. Gap rules. Even if we start to look for longs down here, we're going to take those longs at reasonable profit targets, because if we can't close the gap, we really should be looking for opportunities to sell strength in a longer time frame. Net gas. Still indecisive, range-bound, and dangerous. Open interest yesterday, relatively inert. We lost about 600 in open interest. You see the volume really filling into the front month now. Pretty decent volume yesterday, but again, no real decision. We were looking at these lows here for support. They were supportive day before yesterday, ended up being supportive yesterday with a little bit of a deeper dive down through that level, but no acceptance, just excess. We're finishing downside auctions. We're also, unfortunately, finishing upside auctions, which leaves us to short time frame control. Where do we open? We opened in range, bordering value, looking like a potential day that may bode for some repair. We've got our high volume node in the point of control here. We've got a high volume node up here. We may just rotate back and forth between those levels to fill in any business that didn't get done in the middle here yesterday. That does tend to be something that does happen. We talk about repair quite a bit sometimes. Here he is. Here's my guy, John Wolkowiak. Right here. Not this ugly guy. Not Quickie. There's John. Looking like he's just about ready to dive into a nice, juicy wildebeest of a trade. Alrighty. Okay. Yep, and Quick. I haven't heard from Quickie in quite a while. I hope things are going well for him. He's a good guy. He's a funny guy. Yeah, staring at that e-mini board, right? Yeah. All right. What was the settlement price from yesterday? Yesterday in the E-mini S&Ps from yesterday's session was 39.5650. Yeah, that's in the S&Ps. All right. I hope that's what you were looking for. Okay. What's the number today? I think the number is 3. We've been putting out a countdown on social media. Something exciting I think you're all going to like. Something you're all going to be excited about coming here at Top Step next week. Can't really say what it is, but I think you're going to like it. And hopefully you're going to like Make Hogue Money. So we're going to call this a forecast. We'll get into Make Hogue Money. Be ready at 8:20. Bring your knowledgeable trader with you. It's up to you to make me money. So what was it? Tuesday we had a couple of small losses. We agreed to a trade before the end of it. We agreed to put in the stop, put in the target, see what happens. We got our target. It was a pretty substantial target. We would have gotten it. I got us out a little bit early. I have a tendency to do that, but I think we still had about 6-1, 5 or 6-1 reward over risk on that trade. So nice trade for us on Tuesday. Let's see if we can't do it again. And we will see you shortly. Take your deep breath. Stay humble, grateful, and creative in your trading today. And I'll see you in just a couple of minutes in the proverbial trading pit for Make Hogue Money. If I don't see you,